Welcome to Looking at the Markets. A couple of months ago, I published a video showing that there was extreme fear in the markets at that time, and that made me want to buy stocks, not sell them. And I did buy stocks, and it worked out really well for me. Now I'm feeling a little bit differently, at least as far as mega cap stocks are concerned. I like small cap stocks right now, some of them, not all of them. And I like to feature small cap stocks now and then, just to let you know what I like. There are no guarantees in the markets. I cannot tell you what to do or what not to do. You have to make your own decisions. But right now, it's not extreme fear anymore, at least as far as mega cap stocks are concerned. Here's the CBOE Volatility Index, or VIX Index, now at its lowest level since January of 2020. And when not everyone, but when most of the market is complacent or euphoric when it comes to large and mega cap stocks, that makes me want to buy less of them, maybe even sell some of them, especially if I have a good profit on them. Now, again, you have to do what you think is right. So this is from Bar Chart. CBOE Volatility Index falls to lowest level in more than 4 years. No fear left in the market, and it's basically that same chart. And over here, this is from the Kobeissi letter. Just in the VIX Volatility Index, lowest level since January of 2020, now trading below 12. That's pretty low. I mean, I've seen it lower in 2017, early 2018. The VIX was 9, something like that, 10, but this is pretty low, relatively speaking. Some more charts on that. This is from Tavi Costa, on X or Twitter. A critical alligator mouth to consider, S&P 500 versus U.S. job openings. Yeah, some people say alligators always shut. I mean, I don't want to say always, but when two things are strongly correlated for year after year after year, decade after decade, and then the mouth, the jaws widen, historically they've always shut. I don't know what's going to happen in the future, but when the S&P 500 index just keeps marching higher, and meanwhile job openings going down, 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 yeah, I mean, the stock market has to catch up or down to reality at some point, I would imagine. I'm not making a prediction, I'm just saying. Here it is again from Bespoke Invest on X or Twitter. The rolling 1 month average for the VIX has dropped to its lowest level since, again, January of 2020, just before you know what happened, which I cannot mention on YouTube. Okay, so no fear, no complacency in the market, and that scares me a little bit. No fear when it comes to, again, this is for S&P 500 type stocks. This does not apply to all small cap stocks, some of which I like a lot. So yeah, the S&P 500, SPX from Bar Chart back at overbought levels. You can see here just going parabolic here, and on the RSI 14 period, it is above 70, which indicates overbought according to traditional RSI users. And here's Yahoo Finance, the VIX, Volatility Index, CBOE, just down, down, down. Yeah, complacency, that's what it is. This is from TrendSpider, a company that I like very much. Recommend you check them out. Net long positioning by asset managers and leverage funds in the NASDAQ 100. This is the biggest tech stocks, the Magnificent Seven, that type of thing. It's at record highs. The net long positioning by asset managers and leveraged funds. That's the scary part for me. Has the trade become overcrowded? I mean, I'll let you decide. Investors are all in on technology and AI. Everything's got to be AI nowadays. Doesn't matter if it's profitable or not, as long as the CEO mentions AI a bunch of times in the quarterly conference call, everybody's happy, right? I mean, that kind of reminds me of other bubbles in history. The year 2000, there was a tech bubble then. I'm not saying this is like 2000, but it kind of feels like it in some ways. The 10-year Treasury, I mean, the inversion here. Bar Chart says the longest ever yield curve inversion, the 10-year minus the 3-month Treasury yield curve, which historically has predicted recessions sooner or later, has been inverted for 273 consecutive trading days. Wow, longest stretch of time in history. And I'll show that again. I mean, it's just been inverted for such a long time. It looked like it might come back out of inversion, but nope. So it just keeps going, and the market just keeps buying some of these stocks, like 7 stocks, Magnificent Seven, holding up the markets. Kind of scary. Liz Ann Saunders. Households continue to say they're much worse off versus a year ago. So will reality eventually catch up with the markets, or will the markets catch down with reality? I mean, this is the reality of it. People are not better off, or at least they don't feel that way, according to the New York Fed survey of consumer expectations versus a year ago. And Charlie Bilello, the interest expense on the U.S. public debt rose to, we're getting toward $1 trillion here, toward $1 trillion per year, just paying off the interest on the U.S. public debt. Over the past year, another record high. If it continues to increase at the current pace, it will soon be the largest line item in the federal budget, surpassing Social Security. Imagine that. We're paying collectively as a nation, or we're about to pay, more just on the interest on our debt than on funding Social Security. That's not good. All right, look at that. Look at that interest expense. This isn't the debt. This is just the interest on the debt annually, approaching $1 trillion a year. Meanwhile, there's no fear in the markets. That's what's happening. And so, am I telling you to cash out on everything you own? No, I'm not telling you what to do. But do you have to go on a buying spree on everything? Just because it's the holiday season doesn't mean you have to buy everything in sight necessarily. It's up to you. So I'm looking toward small caps. I'm looking toward just generally stocks that are not overpriced, not overvalued. I'm looking at a lot of different stats and figures and metrics to see what's the best of the best, and I'm ignoring the rest and maybe selling some things that I made really good profits on. And you might, it's up to you, might want to do the same thing. All right, so be careful out there. Don't believe the hype. Do your own research, and hopefully we can all make some money for the rest of this year and for 2024. I want to thank you for watching and listening. I will talk to you again very soon.